morning. This is Mary Ellen McGonagle, and you're watching the MEM Edge show. And this is the show where we put you in front of where the action is in the broader markets. And we certainly have a lot of action that we can look forward to this week in the markets. And let's go ahead and get started. I'll review what we will be going over today. Of course, as usual, we'll go ahead and take a review of where we are, where the markets are, where they stand right now. Of course, this is going to be critical for you so that you can really plan your week. And of course, even beyond that, it's important to make sure that you have a really good sense of where we are within those broader markets. And then from there, we're going to review a number of things today. First, we're going to look at how you can use StockCharts.com to help you uncover pockets of strength. We're in a period of the broader markets where a lot of the various sectors and industry groups are working. However, it's important to be able to drill down to where the strength is, certainly within those pockets. And then from there, we're going to look at some positive stocks within defensive groups. While the markets are favoring growth stocks and some of these movers, I think it's always important to have a feel for, or at least a part of your holdings in areas that are going to be a bit defensive. We're not entirely out of the woods yet here. We can see today the market dropped significantly given what the is on slate as far as the calendar for this week. So you will want to have a little bit of a buffer to withstand potential pockets of volatility. And then top stocks that are due to report earnings this week. We have over 400 companies that are going to be reporting. So we're going to take a look at some of the bigger names that are reporting this week. And then also I'm going to share with you some stocks that are really down and out, potentially turning, and they're also due to report this week. For those of you that follow the market super closely, you may have noticed that some of your bigger movers have been these really beaten down stocks that are coming in with earnings that are ahead of estimates. So we're going to review a couple of stocks there. And then, of course, if we have time, I'm going to review emerging markets. We are seeing some strength over there. I know as far as over there, emerging markets, we will take a look at some of the ETFs that can help you capitalize on the potential move into some of these areas. So let's go ahead and get started. We can take a look here at the daily chart. We're looking at the S&P 500 large cap index. This is as of the close on Friday. And actually, this is not a current chart. So what I am going to go ahead and do is take us over to StockCharts.com, and we're going to go ahead and drill in and take a look at a current chart. I apologize for that, but we can easily go ahead and review the broader markets from here. I'm just going to type in the ticker symbol. And what we are looking at is a daily display of the S&P 500. So what I wanted to point out to you here is the fact that we did have this nice surge on Friday on volume, this is last Friday, that really helped us net out pretty much even for the week. But more importantly, the fact that this index is still sitting above. I'll share with you some of the key moving averages I have here. This green line is your 10-day simple moving average. The red is your 50-day. And then the blue is the 200-day simple moving average. The relevance here is these key simple moving averages oftentimes will act as support during bullish uptrending periods. And then now, as we are potentially emerging out of this bear market, we want to see this index as well as the other broader indices break back above these key simple moving averages with an eye toward eventually breaking up above this 200-day simple moving average and advancing further. Until we do that, we are still in a period of where we could see potential resistance to the upside. So currently we are standing above this 50-day simple moving average. So we are still have the current uptrend in place as long as we're able to retain this presence above that. Now take note at how this 50-day simple moving average is trending downward. Ideally, in order to support a continuation of this uptrend, we do want this to at the very least level out with an eye toward trending upward. And we can take you back to the emergence out of this earlier period in the broader markets in 2018. And this ideally is the move that we want to see, where the indices break back above these key simple moving averages and eventually pull this 50-day into an uptrend. So we are currently in this period with the uptrend trending still in place. Let's take a look at this RSI. That's your relative strength indicator, a momentum indicator. And this is an indicator where we want to see it positioned above this net neutral, which is this dashed line at 0. And we do have that RSI still residing in positive territory. And down below, I have what's called a MACD, and this is another momentum indicator. Two key items you want to look for here, and these indicators are equally powerful when looking at individual stocks as well. We want to see this MACD black line come up through the red. That's your first positive signal, and then up through this 0 or net neutral into positive territory. And that is where we are residing right now. So again, as of today, we are still in good standing as far as the broader markets. Now let's go ahead. What I did want to share with you as a way to further review the broader markets is taking a look at what's called Candle Glance. This is available to you on StockCharts.com from the initial page interface, and they do populate it automatically with a number of ticker symbols. And what I've done is gone ahead and put in various ETFs that represent the broader markets. So we have the broader market indices, the Dow, the S&P, the NASDAQ, and then we also have these S&P ETFs. So XLY, for instance, is consumer discretionary, XLK is technology, and so forth. And what you can do from here is go ahead and put in an indicator. I've added the RSI, relative strength indicator, momentum indicator, and then from here you can sort it by descending. So we're looking at strength to weakness. Take a look here, XLRE, that is the real estate ETF for the S&P 500. And we can see the actual strength here. This is a 2-month snapshot, thumbnail snapshot here. And we can see how the real estate ETF has really been doing quite well. From there, we can move on and take a look at the financials, because the financial stocks really financial stocks had really been not doing well. This was the first ETF to go into bear market territory. So with the advance here, the financials were the first area to report earnings. These depressed stocks did respond quite positively. So financials are really in good standing right now relatively, but we can go ahead and let me show you a couple of stocks within the financials so that you can get a little bit of a better feel. We'll take a look at BAC, which is Bank of America, and what we can see is how really beaten down it had gotten. And this is this gap up on earnings. It is currently residing above this 200-day moving average, but we're looking at a daily price chart. It's a bit overbought. That's above this 70. That's what that indicator is telling you. So we could be in a bit of a sideways trending period here. But let's take a look at a smaller regional bank within banking so that I can share with you some of the other phenoms, if you will, that are going on, because financial stocks really, you can see they're withstanding the downtrending pressure today because a lot of these companies are coming in with nice earnings. This is SVB Financial Group, a large regional bank, and this gap up here is on their reported earnings on Friday, and this company came out with earnings that were ahead of estimates, and we can see the markets responded quite positively to that. Analysts are revising estimates up for this year in response, but really, even more importantly, what I wanted to point out to you is what we're seeing with a number of these financial stocks, in the sense that they've broken up above this 50-day simple moving average. We talked about this with the S&P, but we do still have upside resistance here at this 200-day simple moving average. The RSI is certainly in good standing up above this 50 net neutral, and your MACD has now crossed up above this 0 in positive. But we can see really the extreme downtrend that this, as well as many other banks, have had experienced last year. Let's see if we can pull up another stock here. This is East West Bancorp. Very similar phenomenon. They reported last week as well. And we can see that this downtrend is potentially reversing. It's above this 50-day simple moving average. But again, we're not quite out of the woods yet. We want to see a break up above this 200-day simple moving average at some point. The RSI up here is overbought, so we could see a little bit of a pause here. Going back historically, you want to see how the stock performs when that RSI is up there above that overbought. So this is an example of some of those banking stocks. Let's go ahead back to this scooter view. And what I wanted to point out to you, pardon me, is the fact that small cap stocks are really doing quite well. And this is a bullish sign. You want to see, this is the Russell 2000 index. And we can see that the Russell 2000 is really relatively outperforming a lot of the rest of these broader market indices. And again, when we see small cap stocks, they do tend to be a bit more volatile because they are smaller. Their earnings are going to be a bit more, in some cases, erratic. But when we see the Russell 2000 up here in the forefront, that is a bullish sign as far as the broader markets. Industrials, XLI is the ticker for that. And the industrials are just coming on more recently. And this is a good sign. The markets are broadening out. Originally, as we turned, it was a number of technology and consumer stocks, but we are seeing other areas starting to move to the forefront. We're going to get into some of the industrials. We have a couple of large cap names in there that are going to be reporting this week and so on. So let's go ahead and drill down. Take a quick look down here in the lower right quartile. This is your less relatively strong areas, and we can see that consumer staples stocks, these more defensive areas, are lagging the broader markets going into this particular week. And volatility, it's ticking up a bit today, of course, given the downtrend in the broader markets. It's at about 20. That is an area where you can potentially raise a red flag, but we will certainly see how the markets close today. So let's go ahead, and what I want to start with is taking a look at some of the notable companies that are due to report this week. But before we get into that, I'm going to show you a chart of our RNG. This is RingCentral. And what I wanted to point out to you is the significance of earnings as far as driving a stock's price higher. So we are looking at a weekly price chart of RingCentral. This is a software stock that my company, MEM Investment Research, has been following for quite some time. And what I wanted to point out to you on this weekly chart, each bar represents 1 week, is take a look at when the advance for this stock began. I'm taking you back to the beginning of 2017 when the company reported Q4 2016 earnings. So each of these arrows is representing to you the week that this particular company reported their earnings. You can see that the company, the stock price did advance subsequent to very strong earnings. So ideally, you can see really how critical earnings can be as far as being a primary driver for a particular stock's price. So with that in mind, let's go ahead and take a look at a couple of companies that are due to report this week. These are larger caps. So we can begin by taking a look at Boeing. This particular stock is due to report tomorrow. And so what we are looking at here is a daily price chart. We can see really how volatile this particular stock has been. So I'm going to go ahead and pull up a weekly price chart so we can get a little bit more of a less erratic looking price chart. And so what we can see here on the weekly, the red line is a 10-week or 50-day simple moving average. The blue line is a 40 I'm sorry, this is the 200-day or 40-week simple moving average. And we can see how the stock's price has advanced above these key simple moving averages going into earnings. So it does, as far as today, have a bullish bias as far as being above this potential area of resistance. And so what we can do from here when taking a look at Boeing is take a look at this RSI. On the weekly, it is up above this net neutral in positive territory. So that is another potential, a good particular characteristic to have as a backdrop. Going ahead down and taking a look at the MACD, we can see that that black line has come up through the red, and we're also above this net neutral. So as far as technically, this stock is acting bullishly going into earnings. And there are other things that you can look at as far as helping you formulate your plan. I am not a fan of buying stocks going into earnings. I would prefer to wait. We want to see, does the company come in ahead of estimates? Do they guide higher going forward? But let's go ahead and take a look at, with using StockCharts.com, what you can do is go ahead and type in aerospace and then defense. And this can be really quite helpful because there are ETFs that can give you a sense. You can use the S&P Spider, the Dow Jones, but let's go ahead and take a quick peek at the S&P, and we can see this is the Aerospace and Defense ETF, that it is attempting to reverse here from the bottom, but we're not quite out of the woods yet. But this is the kind of thing that can potentially help you as far as giving you a feel for what may be going on with other stocks outside of that grouping. We'll go ahead and review other areas as well. But Boeing is due to report tomorrow, and as mentioned, it is looking fairly attractive going into their report. Let's take a look at another stock that is going to be reporting tomorrow, another large bellwether stock. This is Microsoft, MSFT, of course. And again, we are looking at a weekly price chart. We do have the stock above these key simple moving averages and fairly bullish standing, but the RSI is not as decisively positive. We're waffling a bit here. Of course, the stock is down 2% with the broader markets today, but let's drill down and take a look at this MACD. Although it is residing above this net neutral zero, we have not seen that positive crossover, the black line up through the red, which would be an ideal characteristic. Let's go ahead and take a look at an ETF that looks at software stocks. IGV is the ticker symbol. This is the iShares software, and we can see that software stocks they did peak prior to the broader markets back here in September, and they are potentially reversing. There is a lot in the way of strength in a number of software stocks that we can easily take a look at. I can share with you certainly some of the stronger names within software. We can look, certainly we were looking at RingCentral. Adobe is a well-known name, but let's take a look at CRM, that's Salesforce.com, and we can see really just how more constructively CRM has been behaving relative to Microsoft. So there are stronger names, but software overall is doing well. So keeping that in mind. And we have time to take a look at one other stock. This is Amazon, AMZN. They are due to report on Wednesday. And take note, if you will, that this particular stock is still residing below its 200-day simple moving average. We can see that the RSI was close to turning positive, but it's actually today down almost 3%, so it's trending downward. We can see the MACD down here. The black line was poised to cross up through the red, not quite occurring. So Amazon is not quite as constructive looking going into their earnings report on Wednesday. So we certainly have Facebook is due to report as well. We can take a quick peek at that stock on the weekly. We can see that they peaked back in August with their issues with confidentiality and the stock is attempting to reverse, but again, the RSI not quite positive. Now, on these weekly charts, you want to, we can see that the MACD, we did have that positive crossover. We're not quite up above that net neutral. But when we're looking at charts, weekly charts are going to be more forward looking, if you will. So we can take us back, certainly in the beginning of 2017, this break back above, we can see how telling it was as far as an 18-month advance out of that. But when you compare that to a daily price chart on a given stock, that's going to be a little bit, it's shorter term as far as foretelling. So we can see that the MACD is positive on this daily chart. The RSI is positive on Facebook. So on a short-term basis, we are positive. There is a uptrend in place. However, we could potentially find resistance at this 200-day. So your daily chart, when you're reviewing it, is going to be, as far as forward looking, it's going to be shorter term. I talked about looking at some stocks that are due to report this week that are a bit more down and out. And so we saw that with the financials. Those stocks that were super down and out, they do have that potential to bounce a bit more. So let's take a look at a company. We'll look at about 3 stocks that are a bit down and out and potentially turning. This is Align Technologies, ALGN, and this particular stock was a big winner back in 2018. The company was on all 4 burners as far as reporting strong earnings. This gap and breakdown here was on their most recent earnings report. Now, of course, this drop prior to their earnings was broader market related, but they did come out with earnings that were not, the markets were looking much higher on their reporting side, and the company guided lower for this year. But what we can see is occurring now is the stock did get very deeply oversold, and that's your RSI down here below this 30, indicating oversold. But more recently, the stock has turned potentially positive. It's up above this 50-day simple moving average. Certainly, this green line is your 10-day poised to cross up above it. That's a golden cross. So we could potentially see upside here. Over the near term, the stock is looking positive. They are due to report tomorrow, but let's go ahead and take a quick look at that weekly chart that we talked about. And again, we can see that it is up above this 50-day simple moving average. RSI not quite positive yet, but your MACD poised to cross positively. So that's one certainly to keep on your radar. Again, I would not buy going into earnings given the inherent volatility. But here's another one. We talked about Boeing, but Lockheed Martin is not as constructive looking. It is still potentially trying to reverse this downtrend. We can see on this weekly chart that the stock's price is above that 50-day simple moving average. Take a look at the daily. It's trending just up above it, but we're not out of the woods yet. You can see that the RSI is above this 50, MACD up in positive territory. So certainly on a shorter term basis, we are in bullish standing, but we do have work to do to break up above here. They are due to report, but one company that I did want to point out is Wynn WYNN. These guys are due to report later this week. This one is a bit more interesting looking in the sense that the company is due to report on Wednesday. This is a daily price chart, and they are a little further along as far as their potential downtrend reversal. We're up above this 50-day simple moving average. Your RSI is trending positively. Your MACD is up above that net neutral 0. This particular company, analysts are revising estimates higher going into earnings for both this year and next. This company had really peaked back here in May, and a lot of this has to do with the bear market, with China's deteriorating economy. They have a big presence over in Macau, but more recently we've seen gambling, online gambling legalized, and these guys are on the forefront of that. So I would keep this certainly on your radar screen. Let's go ahead and take a look. I talked about using StockCharts.com to uncover strength. So what we are going to do is go ahead over to the initial page here on StockCharts.com. And what I've done is I've scrolled down a bit, and what we want to do is take a look at this SCTR reports. These are scooter reports. I'm going to click on to this, and initially it's going to show us the large cap. And so this scooter ranking is primarily technically driven, but it is really a powerful way to very quickly get you in front of where the strength is in the broader markets. And I can tell you, looking at any of these stocks, Xilinx was up 18% on strong earnings last week. WDAY is a very strong software stock, and so on down the line. Chipotle, all of these are stocks that are really outperforming the broader markets right now, and for very sound reason. They have earnings estimates that are being revised up, or in the case of Xilinx, they reported super strong earnings and raised their guidance. So what we can do very quickly is just eyeball this and take a look. We do see a number of technology stocks up here in the forefront. From there, you can just drill down and take a look. Software is well represented. And this is a very quick way for you to get a handle. Semiconductors had a big week last week. We can see Xilinx, AVGO, Broadcom is another. By going ahead and covering your cursor on top of the ticker symbol, you can go ahead and see the chart. And a lot of these stocks are either hitting a new high. Starbucks is another one that had a very good week last week. The company reported earnings that were above. Analysts are raising estimates going forward. So this is where really quite simply where your strength is in the markets. And you can quickly eyeball that. What I'm going to go ahead and do is show you another way that you can sort this scooter report. And that is by looking at using ETFs. These are exchange traded funds, and they, again, scooter rating here, 99 is the highest that you can get. And these, again, are going to point you toward where the strength is. And what you can see quite quickly is a lot going on in the emerging markets. We can see Brazil, Indonesia, and then also Saudi Arabia are all well represented. The Philippines are up here in the forefront. What I want to look at here within this ETF listing is some of these ETFs that are not so much emerging market, that can really help me focus on the US. So we can see OLD. This is a long-term care ETF. So we can quite quickly go ahead and pull up this particular ETF. OLD, and we can see really in what good standing it is in. And I will tell you that this is taking us back to those real estate stocks. So I talked about the fact that real estate stocks are doing well, but it is the REIT stocks that are really outperforming the broader markets. OLD is comprised of a number of REIT stocks, home, healthcare properties, and it's geared toward helping older, certainly individuals. So what we can do is from here, go ahead and take a look at some of the other ETFs that are not so much emerging market related to really help point you toward areas that are strong. And you will see this is another real estate ETF area. XLRE is real estate. So those REIT stocks are really where you will want to go ahead and take a look. I will have to leave it at that, but we can certainly next week take a look closer at some of those emerging market stocks. And for those of you active in the markets, happy trading.
Is your portfolio positioned to profit from continued market volatility in 2019? Join over 100 investing and trading experts, including policy guru Steve Forbes, emerging markets icon Mark Mobius, America's best income investor Bruce Johnstone, elite energy analysis Stephen Schork, and trading visionary Tom Sosnoff at The Money Show Orlando to get the best ideas for protecting and growing your investment portfolio during 250 in-depth presentations. Claim your free pass now at orlandomoneyshow.com.